There's some numbers. There's some numbers again that's probably been updated by the CRA government. So you need to check your CRA website so to see the updated numbers of updated percentage. And the third thing is strategies and ways that you can use to maximize your benefits. It's my opinion. It's not advice. Please consult your tax professional or tax accountant for this. Okay, having said that, let's dive into tax deductions and tax credit in Canada. Yep. Basically, when we look at tax deductions and tax credit, we're going to look at the introduction to tax deductions credit, the key differences between both of them, and
Nigeria,
what are
sit
the
down now.
filing tips we can adopt, filing tips to adopt to maximize our benefit. And secondly, we are also going to look at some provincial tax credit and deductions that are available to us depending on the province where you reside. So like the first section, I said introduction, key differences, and let's just move to what is tax deduction. Listen, basically, it's just an amount that is used to reduce the taxable income, which is just as simple as that. For example, you earn a gross income of $100,000 and oh, there's a tax deduction of $20,000. So the net is 80,000. That amount is what is taxable. That is what it's going to be subjected to tax. We have several exa we have several examples of this kind of deductions that we can use. The most popular one that we all know about is the RRSP, which is the Registered Retirement Savings Plan. Definitely, this is just a contribution towards your retirement savings. And come to think of it, for you to calculate that, you have to use 18% of your previously earned income compared to a particular cap, whichever is lower. That is the room that you have to contribute. And again, this RRSP, most people don't really take advantage of it. You can take advantage of it because, and there are other ways you can take advantage of it, whereby you can even borrow from the RRSP account if you want to purchase your first home. And the law, if it allows you to purchase up to 35%, up to 35,000 tax free from the RRSP account. And there's another one, which is like a pooled registered pension plan. That one, it's more or less like a substitute to RRSP. What does that mean? Basically, there are some organizations or companies that don't offer the RRSP, and definitely you can create a pool registered pension plan for yourself, and again for a self-employed individual. So basically, this is a great tool that is widely used, and we can also use it to maximize our benefit when we start talking about the tax strategy at the later end. There's another one is that is called the FHSA. This is a new one, which is like a first home savings amount. This is a newly registered plan that helps individuals to save for their first home. You are allowed to save up to $8,000 annually and a life limit of 40,000. What this simply means is that amount will directly be deducted from your gross income. That forms like the 20,000 example I've given above. So these are the tools you can also use. We have employment expenses. Definitely, there's some people here that work from home and all those things. They have the ability, you have the avenue to claim eligible home office expenses. But remember, these eligible home office expenses, you must not be reimbursed by your employer. And what is very critical at this moment is that your employer must sign a form called C-2200. Yes, when you're filing your taxes, definitely Sari will not tell you to submit it, but what Sari wants you to do is keep that form, let it be signed, because at the end of the day, when they start auditing you and they audit that particular line, they will definitely request for it. I've seen so many situations where they've done that before. Another thing is like the childcare expenses. This is a part of a tax deduction that you can claim. If you pay for childcare expenses so that you can go to work and go to school, you may be eligible to claim those expenses on your tax return. And this amount will definitely reduce your amount of tax that you have to pay to governments. So payers can Canadian taxpayers can claim up to the maximum of 8,000 per child for the children under the age of 7. But the children between 7 and 16, definitely you can claim $5,000 per child. There's some people that are part of a union or professional bodies. Yes, you have to incur yearly subscription. All these expenses can actually form part of your tax deduction that would reduce your gross income. One thing is registration fee or amount you pay to to register. Those ones are not allowed under the law. Business expenses, or a lot of people they are involved in other in businesses or side also. We have some other side also. All this business activity, you need to keep accurate account of your expenses, and these expenses can form part of your tax deduction. And this can be captured in Form 220 and Form T2125. This Form T2125 is called the Statement of Business or Professional Activities, which allows you to capture most of the tax deductions allowed. What are the things that you can capture there? Starting from home utilities, electric bills, gas, rental income, your rent that you paid, a portion of it, especially there are some people that like, oh, you have a particular portion of the house that you set aside to earn this income. Definitely, all you need to do is calculate the space and use it to calculate your rent or portion of the utility you incurred for this space. And there are other tax deductions, expenses that you can use. So just moving expenses is one of them. Moving expenses, most people don't really take cognizance of claiming moving expenses. Why? Because probably they don't know about it, or probably they've not yet explored all the possible expenses they can take advantage of. The law says you have to move at least 40 kilometers closer to your place of employment. That's when you can claim this. Moving expenses such as storage costs, storing your properties, maybe temporary accommodation, you can claim that. Insurance for moving, you can claim that. Even when you end up paying additional rental income or leaving that space, or because you are moving, you can also claim that. There is a limit as well because all these things are also limits that uh, apply to them. If you have questions, concern, please consult your tax consultant or anything. So that's more of tax deduction. So let's go to tax credits. So what is tax credit? Basically, this tax credit directly reduces your amount of tax payable. Yeah, you've calculated the tax that you're supposed to pay. The tax credit reduces it. For example, you have a taxable income of 80K from our previous example. For argument's sake, tax percentage bracket is 20%. So you are meant to pay $16,000 back to the government as tax payable. But hold on, is that what I'm going to pay? Not yet. Let's apply. Let's assume there's a tax credit of 6K. At the end of the day, you'll be paying government 10K. At this, let's switch the coin. Let's assume your tax payable is like $1,000 and your tax credit is 6,000. Yeah. So the difference is like $5,000 refund. But hold on, before you get that refund, tax credit is divided into two: non-refundable tax credit and refundable tax credits. So that's one thing that we need to spend a little time on, like letting people understand aware those kind of credits that are applicable. So what is a refundable tax credit? Refundable tax credit, it does not only reduce your amount of tax payable, but it also
Hello?
creates a refund to your pocket, even if
Good.
you don't owe any tax. What does that simply mean? I don't owe any tax. My tax payable is $0. I have $5,000 tax credit. I can tell you, you're getting that refund back. That is called a refundable tax credit. Examples like GS rebates, Canadian Workers Benefit, and the likes. But what is a non-refundable tax credit? That does not create a refund. It's going to reduce your tax. Fine. For example, um, you owe tax of $1,000, you have a tax credit of 6,000, you'll be thinking that, oh, let me collect my $5,000 back. No, sorry, it's a non-refundable tax credit. So that is an area that we taxpayers need to actually focus on because sometimes it's an avenue for us to actually maximize our benefit. And ways we can do that, there are so many strategies where you can defer some of this non-refundable tax credit that people really don't know. But list where yeah. So let's go and see this tax credits one after the other. We have the most common one is the basic personal amount. So if you look at the basic personal amount, fundamental, this is a fundamental element, I mean, to your income tax system that allows an individual to claim a certain portion of an amount. For an individual earning about $165,000 plus, once $65,000, you are allowed to claim about $15,000 um, basic personal allowance,
I
which is
disagree.
15% of it. But for who earning about $235,000 and more, the basic personal allowance is
Mm-hmm.
13,520.
Mm-hmm.
Don't forget, 15% of those amount is what actually impacts your
Modeling.
tax payable. The other one is the
Well,
Canada Employment
I
Amount.
don't know if it's
This
okay, so.
allows you to claim a work-related expenses up to a maximum of like $1,368. What am I talking about? Yeah, every worker as an employee, yeah, maybe cost of uniform and all those kind of stuff. There are other cost-related expenses you will definitely incur. So this is a non-refundable tax credit that you can take advantage of. Another one we're looking at is the CPP and EI credit. This credit is for employees, for anyone who made contributions during the year. And most of the time, CPP and EI creates a tax refund. How does it create a tax refund? For example, let's assume someone works for like two or three employers together at the same time, and those employers don't know about other or don't know. Definitely, they will want to deduct CPP. At the at the end of the year, you might end up paying more CPP and more EI, and this creates the excess creates a tax credit to you. If you look at CPP, there's always a max amount as well. The maximum amount you can claim, the maximum amount of contribution towards CPP is 3,123, and 3,407 for Quebec residents. And for EI, it is 1,002 and 781 for Quebec residents.
You've not passed that place.
Another tax credit that I want to talk about is the spouse common law partner tax credit. You can claim this amount if at any time in the year you supported your spouse or common law partner, and the net income and their net income is actually lower than a specified threshold. Another one is the home buyers plan. For people buying home for the first time, they are allowed to claim a limit of up to $10,000. This amount, you have to apply 15% on it. So, for example, home buyers plan, you claim $10,000, 15% of $10,000 is 1,500. Believe me, that's just like this 1,500 that impacts your tax payable amounts. And even the law even allows you to split it with the spouse or common law partner as long as both amount does not in total doesn't exceed the $10,000. We have something like the home accessibility expenses. Okay, if you have someone that's a senior or disabled person are living with you and is an eligible person, you can claim up to $20,000 in costs associated in redesigning or retrofitting your home for the person involved. So that is another um tax credit you can claim. Tuition tax credit. I've seen a lot of students, they come and meet me and say, oh, Deji, okay, tuition fee, I need to collect my money back. I say, yeah, you can collect your money back, definitely. But this is it. It's only 15% of amount you pay. That's tuition
Hello.
fee. That is what you
Yeah,
are
can I help you?
eligible for. And this amount
Yeah,
must be in
how
your
can I
teacher
help you?
certificate, which is C2202. So, for example, you pay $10,000 school this year. In 2024, 50% of it is 1,500, which will be applied as a tax credit towards your tax for the year. We have student loan interest tax credit as well. If you have a student loan, the interest on student loan is eligible for tax credit. 50% of that interest amount is what is the tax, tax credit that will be applied to your tax as well. Another thing is the charity donations, charity donation tax credit, which is if you donate to a qualified recipient, such as a registered Canadian charities, the tax refund, you are entitled to this tax credit, but this tax refund varies by provinces. However, let's look at the federal level. At the federal level, any amount donated from $0 to $200, we're going to apply 15% of it. And anything above $200, we apply 29% of it. But at the same time, they're going to all the provinces also have their own credit rate for the donation. For example, Alberta itself, for the first $200, they apply 60% on the first $200. Ontario applies 5.05%, and Manitoba applies 10.8%. But anything above would vary. So it's always between 11% to 24% for other provinces. Medical expenses, this is also very critical, and we need to also claim that. What are the eligible expenses? It ranges from normal routine dental check, doctor's fee, um, eye checkup, medical travel expenses, all these fees, prescriptions, all these fees incurred during the year, you are eligible to claim a tax credit at the end of the year. However, there is a clause to it. Before you can uh, claim it that credit, it's not the total amount you can claim. It's the amount you can claim is the difference between amount you spent and 2,600 or 3% of your net income, whichever is less. The 50% will be applied. With the next slide, I will give like illustrations with examples of using numbers to explain this because this is also very, very common. The next thing is the disability tax credit. Disability tax credit is to those eligible qualifying conditions it helps to that is helping people with disability. You can claim that on behalf of yourself or a dependent spouse or common law partners, and even yourself. That GST, HST rebate, they love a GST, HST rebate. Once you file your tax, you automatically qualify for this rebate on qualifying expenses incurred, which you pay GST on. This is, and to do that, you have to complete, there's a form GST 370 that you need to complete. Another workers' benefits. This is a refundable tax credit intended to supplement earnings of low income workers. So if I'm earning like 160 or 170,000 per annum, why do you qualify for it? So those are the questions you'll be looking at. So it's usually for low income earners, and there is always a maximum amount you can claim. The maximum amount you can claim in 2024 now, I think is like 1,518. And in 2023, it was like about 1,004 something as an individual. And for family, it is 2,616 in 2024. And we have several other tax credits that we can really mention. Adoption expenses, sometimes if you subscribe to a digital news, that's called digital news subscription expenses, volunteer firefighter amount. These are tax credits you can actually take advantage of. So let's go to the illustration. We're putting numbers into perspective. So I just brought up three areas. So tuition tax credit, very simple. Up to my left now, you see, oh, someone paid the school fees of $20,000 in 2024. And what's the tax credit that the person can apply to these are tax payable. 16% of $20,000, which is $3,000. For example, when you have a tax to pay of 3,000, of 6,000, remove 3,000 from it, you just pay 3,000 left. Remember, this tuition is a non-refundable tax credit. So bottom left again is donation calculation. Oh, let's assume you donated $500 during the year in 2024. For the federal tax credit calculation, the first $200 at 15%, $30. The next $300 at 29%, $87. In total, $417 at the federal level. Provincial also have their own calculation because of the numbers they gave. Like Ontario, they have 5.05% at the first $200, Alberta about 60%. So those calculations come into play as well. Medical expenses, which is very important because, yeah, we spend a lot on medicals, quite all right, for the year. I mean, for example, you spend $4,000 on medical eligible expenses. And let's assume your gross income is $135,000 and you are eligible for a tax deduction of 25,000. That alone will give you a net income of 110,000. So first, let's compute the lesser of 2,635 and 3% of your net income. 3% of your net income of 110,000 is 3,300. Which one is lesser? 2,636 is lesser. That's what I'm going to pick. That's A. I'm going to do step two. Let me calculate the difference between the amount I spent and the lesser amount. I spent $4,000 in 2024, and the lesser amount is 2,600. So I have a tax credit of like 1,365. Now, what's the actual dollar impact? 15% of 1365, which is 205. At the end of the day, I spent $4,000 medical expenses. It's only $205 that is going to reduce my tax payable or tax refund if I ask. So let's move on to the key differences. What we see, oh, we have between tax deductions and tax credits. Yeah, we understood. Tax deduct tax deductions actually reduces your taxable income. As I said, from you earn $100,000, remove $20,000, your taxable income is 80,000. But tax credit reduces your tax payable directly, and it could create a refund if it's a refundable tax credit. So the impact on tax indirectly depends on your tax bracket, which is very important. Canada operates a progressive tax system, which means the higher your income, the higher the tax you pay. That is it. So it depends on the bracket you fall into. For example, someone earning $100,000, another person earning $130,000. The $100,000 will be in a low bracket lower than the one with $130,000. And the tax credits is a direct dollar for dollar reduction. And we have examples of tax deductions and tax credit that we've really dealt with. So now this is a critical moment that we need to now we are going to the next phase now of like how do you maximize your tax benefits? That is very important. So number one, to maximize your benefits or even minimize your payable, have organized your receipts. Is important. That's very important. Keep detailed records of all eligible expenses, such as medical bills, childcare costs, childcare expenses, and charitable donations. All these things are very important. I can tell you, when you are picked up for audit, CRA always requests for all these support documents to substantiate the numbers you've used in your tax filing. Number two, understand the provincial variations, which is very critical. Where you stay, we know Alberta, you're staying Alberta, you're staying Ontario, Quebec, New Brunswick, Nova Scotia. You have to understand and research on the credit specific to that provinces. So, and then they can see these things can actually significantly impact your tax return. Number three, claim spousal or dependent benefits. I mean, if applicable, please, you can maximize your tax benefits by claiming all those things. Look at it, research it, and claim every benefit you think you can claim. Like if you have a dependent and rely on you, you pay for some of these related costs that are eligible, then try and claim everything. Number four, which is something that a lot of people don't really take cognizance of, is like plan to carry forward some things. For example, uh, for RRSP, we have limits. If you think that last this year I'm not earning a lot of money, so why do you want to fully utilize your RRSP? Why not just carry forward your unused portion to next year when you think you're going to make more money next year? So use that to reduce your taxable income because RSP is part of a tax deduction. So those are important things. And again, for tuition credit, yeah, why do I want to? I know my tuition credit is non-refundable and I have the certificate and I know that I'm not paying tax this year. Why do I still want to use it? I'm not paying tax already. So why am I going to put a non-refundable tax credit or apply it again? Then move it forward. Those are things you can do. Plan to carry forward all those things, and they are very critical in maximizing your benefits. Another thing is, well, consult a tax professional, which is important. You know, tax rules, laws can be complex. Even sometimes I do something of looking at Canada government and I just look at, oh, I need to start looking at a lot of things, because you can spend 5, 10 minutes staring at just a page, It's very complex. I understand that we've been in that position before in so many things, times when we deal with the government. But try and consult tax professionals that can help you navigate all those things. And lastly, use CRA tools. Those tools are there. Everything are there. CRA website, you can use the tools to, maximize your benefits. So we're going to some examples of provincial for some provinces, looking at the tax credits versus tax deductions. We've picked like three provinces. Number one, Ontario. I'm looking at Ontario. Most of the time, the tax deductions available in Ontario, it's similar across all other provinces as well. We've talked about the registered retirement savings plans. That's where the contribution reduces your taxable income, and you can grow your tax deferral until withdrawal. We've talked about the union and professional deal, which is also the you can deduct the fee paid to maintain those membership in any professional association or union's childcare expenses, if you incur daycare expenses, nanny or after school program, these are tax deductions you can take advantage of. Moving expenses, if you are moving and relocating for school or for work, if for a full-time school or for a work, you must at least move 40 kilometers closer to the place of work to claim all these expenses. And the earlier part, we talked about those moving expenses you can claim. It's a lot you can claim. If you're not sure of it, please research or consult a tax professional. And Ontario also offers several provincial tax credits that people can really utilize. We have the Ontario Trillium Benefit. This is a combination of like the Ontario Energy and Property Tax Credit that helps property tax and energy costs. We have the Ontario Sales Tax Credit as well that people can use, which provide relief from the harmonized sales tax system. This is also like because of the rising cost of groceries, those are the things. And we even have Northern Ontario energy credits also as well, uh, that can be utilized as well. These are uh, credits someone can really make use of. We also have child care access and relief from expense, which is tax credits that can be used. We have Ontario senior home safety tax credits can be used. We have low income individual and family tax credit. This is for the low income. They call it LIFT, which can be used. We also have Ontario apprenticeship training tax credit can also be used. That can also be used. So, what are the strategies to maximize the tax benefit in Ontario? Honestly, it's still almost what I've said so far. Like ensure all your credit and deductions such as care credit are claimed. And sometimes most of the time, you just have to file as a family because this is also important because there's some tax credit, non-refundable tax credit or tax credit can be utilized for the high income earner partner so that you can all benefit filing tax jointly. The second province we are looking at is Quebec. Tax deductions and credits. Yes, the same thing for deductions, RRSP, which is common, union and professional deal, child care expenses, moving expenses, work-related expenses, all these are common. And if you look at the specific tax credits to Quebec, we have the Solidarity Tax Credit. This is a refundable credit to assist low and middle income household with housing and consumption taxes. We have the tax credit for childcare expenses as well, child credit for home support services for seniors, first-time home buyers tax credit as well, and even tax credit for volunteers or search and rescue workers. So many of them. And again, if you look at the strategies that you can adopt to maximize your benefits, still update your information on the Canada, Quebec account and try as much as possible to capture all these tax credits based on your income, dependence and housing costs. Plan a childcare payment as well. Use those childcare eligible providers, definitely, because before you can claim those childcare payments, the providers must be eligible within a province. So those are the things you can use to maximize your benefits or minimize your tax payable. Tax deductions and credits in Alberta. Oh, strictly, not that different. Same thing, RRSP, union deal, moving expenses. But let's look at the specific tax credit in Alberta. I know we have the Alberta Child and Family Benefit that can be used. We have the Alberta Senior Home Property Tax Deferral, which allows seniors to defer all or part of their residential property tax through a low interest loan backed by the provincial government. We have the Alberta Family Employment Tax Credit as well. Um, so many of them. And what are the strategies you can use to like maximize your benefit on Alberta? Also, you can combine your Alberta child and family benefits and the Alberta family employment tax credit together. I mean, for the low to medium income family earners, you can also support some apprenticeship program whereby you can get tax credit that would reduce your cost. And again, when you invest smartly, sometimes you have to take advantage of Alberta investors tax credit. by investing in eligible sectors to reduce your provincial tax credit. Also plan to use the childcare services that is recognized by the province because you can take advantage of the expenses you incur. So, having said all these things, I mean, there are ways and manners we can use to keep track and do track of our expenses and stay organized. I mean, during um, filing our tax, but it's important and necessary for us to start doing that ahead. So, this one is going to be talking about app that can be used. I mean, I use it personally. A lot of people use it as well. That you can use it to stay organized during taxes. How does this app work? Basically, take pictures of your expenses, extract the data, and then you can have your support document saved on your. You can have the support document saved on the app, and whenever there's any tax audit, you can generate it and send to the CRA. And secondly, for tax professionals, when or tax consultant, when they file your taxes for you, they charge you extra for helping you to stay organized. With this app, download your expense report. I don't think they should charge you extra for that. Definitely because you already have your expense report. So if you find it useful, I think, or you need it for your business, for your site also, I think it's necessary for you. You can download SEMA Scan app and start using it. And this is an example of how the app, this is the report section that allows you to generate your report. And when you generate your report, you can easily see all your expenses. In case of CRA audit, you can provide everything. I don't think the tax consultant will be charging you more for that. Strategically plan for your expenses because you can monitor your expenses on a monthly basis and see where when you've been incurring the larger expense for strategic decision. So if you think this is very useful to you, just go to www.semainc.ca to download or search for SEMA Scan app on Google Play or App Store. So conclusion, I mean, it's quite engaging. It's fascinating that this session, we can't use it to go through everything, but at least most common ones that is what we can talk about. And more importantly, try and combine your federal and provincial deductions and credit if you want to fully utilize, maximize your benefit. I mean, Canadians can significantly reduce or minimize their tax liability by definitely staying informed about the available opportunities. You have to use effective filing strategies to ensure that you maximize your savings. And again, try to plan carefully. Plan carefully to take advantage of these deductions and credit. I've said it all over again. Please, it's important, very critical. Tell your consultant, ask them which one are non-refundable tax credit. Okay, if I use it now, is it beneficial to me to use it now, or is it possible for me to defer it? If you can defer it, definitely why are you using it now? If you think you're not going to earn a lot of income this year, so why are you using your RRSP run? Remember, the RRSP, you have to calculate using your 18% of the previous earned income and subject to a limit, whichever is lower. So you have to start planning carefully about those things. Then from that aspect, you can easily maximize your tax benefit. Because I've seen so many questions and so many conversations with people where they'll tell me, this person, I got a refund of $10,000. This person got a refund of 5,000. This person got a refund of $1,000. Why? Something is wrong. The question is, are you sure it's wrong? But because I try as much as possible to tell people, no, your situation this year is different from last year. If you buy house last year, you'll be eligible for home buyer's plan. This year you did not buy any house. Where are you going to see the $1,500 that is going to reduce your tax? It's not going to happen. You started school year, you've paid about $50,000 for school fees. You got your taxation credit for the first 2 years of working. You've been able to use that tuition credit to reduce your tax payable. The third year, I'm sorry, you're going to pay some all things being equal. So situations will differ. And some people like, childcare expenses. Some have children, 3 children. Okay, you pay childcare expenses. These are tax deductions, but you don't have, you didn't incur it. So why are you expecting the same refund with this person? So I try as much as possible to explain all these differences. But one thing I always tell you that is critical, please, let us stay updated. Look at the tax laws, look at the tax law, look at the things that are there. If you see anything that you think should have been used and your tax consultant is not using, please feel free, message them, tell them, speak with friends, speak families, know how to apply it. These are the ways you can actually maximize your tax benefit. And the last advice is, find a tailored advice, consult a tax professional, and also use certified tax softwares. Most of those certified tax softwares can see if you can go to CRA website, you can see the list of those softwares you can use. The good thing about those softwares is that they've been updated with recent changes in tax system, and automatically all those deductions are always there, and there are rooms for you to put all those deductions there. But if you are not sure of where to put anything, please advise, consult, consult with someone. I think basically that is all about. And okay, the bonus one. Who is Philad? Philad is we are just we are trusted partner for expert accounting, bookkeeping, tax services with dedicated team of professionals. We simplify your financial management, ensuring peace of mind, financial success. What are the services we offer? We offer tax services, T1, T2, T3, GST, GST, tax reform, tax funds, submission, tax compliance, and even we also represent clients speaking with CRA for any tax audit or anything that comes out. If you have issues with CRA or anything, Philad is there. We do bookkeeping, accounting, preparation of financial statements, financial modeling, and business consulting. I think, right, yeah, and basically that's all. Thank you very much.
Thank you very much for your time. Thank you so much. That was a lot to learn within 35 minutes. I guess you cannot catch your breath now. I know you were rushing so that you respect people's time. Thank you so much. We
Yeah. So, sorry, the thing is, as I said from the onset, that there are a lot of things there. We can't do everything. And again, individual person cannot have all the tax situations, both refunds or credit specific. So that's why it's important. If you have questions, if you have concerns, please, um, and you can consult, send me an email. Shoot me a chat. I mean, ready or ask your professional, your tax consultant, your friends, every one of them. Uh, you can also go to CRA website, and again, if you go to Fela, we've also written we've written some papers published on Fela.ca where people can understand some things about taxes, some situations, and these are live examples because the idea about that blog is like, what are the practical things? What are the things people usually face? Those are the things that are written in the blog. If you go there, you can read a lot about it, RRSP, how you can deduct when you over contribute, what are the implications, so many things. Sorry, let me see. Yeah, thank you very much for having me.
Thank you so much. I appreciate your time today. And I always like to say this, we all are learners, especially me. I learn a lot. So I've learned a lot today too. I at least you have made me to remember some things that I actually could forget because I don't file taxes. So if you're here and you're looking to file taxes, yes, you know me and I referred you to Deji. I can vouch for him. He files personal and corporate taxes, and I think you would have his name on that presentation. So we have questions in the chat. I sent it to your WhatsApp, or do you want me to read it out? Whichever one, which one would you like? I can't hear you. I don't know why.
Okay, so please, you can read it out. Or let's see if it's in the chat. I can check the charts and let's.
It's in the chat.
Okay. So,
Yes.
um,
Okay. The first one says, under what law does one get a rebate? I believe the rebate is referring to GST or HST. But Sherry, if you are still here, please feel free to,
so
yeah, she's still here.
So for the GST rebate, once you file your tax, automatically you are qualified for that rebate. And again, as I said, mostly if you're looking at rebates coming from filing your tax because of you incur some expenses that as GST and HST, you are qualified for that. And if you look at it very well, there is a form that you also need to fill. Because sometimes when you come to Canada, you start incurring, once you're a resident of Canada, there's another GST credit you have to get because there's an assumption that definitely you buy groceries, you have to pay GST and HSA for that. I know there is this, like, there's some days um holiday for GST gets now. So basically, uh, the government understood the fact that, oh, you buy a lot of things, grocery and all those things, you pay GST, and then qualifies you to get your GST back. And again, it's paid quarterly for those ones. If you file your tax, even once you file your tax, you start getting it. And they start calculating from the first day you became a resident of Canada. So all your backlogs, they will pay you back. Definitely, those are the things.
So the second question is multiple questions, so I'll just take it like this. The person has asked you to explain the form TD1 for personal tax credit returns. That's how I read it. Please, can you help with an explanation for form TD1 that is used for personal tax credit returns?
Yeah, so let's the first one, I say, okay, explain for tax TD1, personal tax form return, does dental medical fee charged while studying as medical student? Okay, so a lot of phases. So for the tax TD form one, it's more or less when you get employed by the employer. So they give you all those forms for you to fill. So that form is just for the employer to be able to accurately determine the kind of credits that you will get. So that will be factored in. Like what I noticed is that's will be factored in determining how much they'll pay you from for your salary. At the end of the day, it's a personal tax system where at the end of the day you have to go and incur you have to go and file your taxes. That's when your personal situation will now also come into play because in that form, I know some of the questions they ask again is like, okay, have you been employed by do you have another employer? Because all those things they need to consider that you can, for example, you can only claim personal allowance once. You can't claim it in different places. So those are the reasons why they will ask those questions to know if they should put it there. Most people don't even put it there that if you're working for 2 or 3 employers, you won't put it there. But at the end of the year when you're filing your tax, everything will be consolidated. So I think it's asking about question about does dental and medical fee charged while studying as an international student for me qualify under the total. I hardly go to any service from the fixed up. Okay. So if I should look at this question, I don't know. So if we are talking about medical and data fee, so the thing about medical and data fees, medical expenses, basically, if you are paying for medical expenses, definitely you are kind of eligible to claim part of it as tax credit. But I did like a simple calculation of how you can get it because at the end of the day, there is a limit there because the government says the lower of $2,635 or 3% of your net income, whichever is lesser, and any amount you paid above that amount is going to be subjected to 15% that will reduce your tax payable. So we need that day we need to check all those things and applications that are being used, all those calculations. But in theory, that's how it would work behind the calculation. But if you have more questions about it, please feel free to message me, email me, then we can delve into that particular situation. So another question I have here, right? James, can I go ahead looking at the questions because I'm looking at it from top?
Yes, please. So
this one says, can a secondary school who does not have student finance still claim tuition tax? Student finance. I didn't get this question properly, but what I can sense is, are you saying that if you did not pay for the school fees, maybe someone paid for it for you? If that's the case, you can still claim it. You can claim the tuition credits.
Okay. Excuse me. So I was the one who asked this question.
Okay.
So what I'm trying to say, like I have a student who does not have student finance. So she's paying her fees through her RESP that they save for her tuition. So that's why I'm asking, like, since she's not having student finance, can she still claim tuition fees when she's paying
Absolutely.
her taxes?
Yeah, absolutely. Because the institution, the recognized institution, is going to issue a tuition certificate to all students that paid school fees. And
Okay.
that certificate will have the amount the student paid for school fees. And that's the amount that is going to be filled under Schedule 11 of when you are filling your taxes. And that is subject to 15% tax credit that will reduce your tax payable. Remember, this is a non-refundable tax credit, which means if that credit is more than your tax payable, government is not going to pay you back the difference.
Oh, okay. Thank you.
Thank you. You're welcome. Okay,
Then,
I have a
okay,
question.
I
Another
asked again about this dependent benefit. So what does CRA class as the dependent benefit? Say, example, I have my daughter, even though she's an adult now, but she's a student, and I'm paying everything for her for like since she's a student, I'm paying her tuition, buying her books. So does that class as can I claim dependent benefits for that, or is something else they are talking about?
so
Yes, the great concert teacher.
so everything it depends the eligibility. We need to look at the eligibility criteria. And again, as I said earlier on, that when you're claiming dependent benefit, that's one thing you have to look at. You look at uh someone below the age of 7 and someone below above 7 to 16. So those are the things that CRA will also consider as well when when we want to claim such. So for peculiar situations like that, you are eligible to you can claim, but for only eligible expenses and if it meets certain criteria.
Okay, as a adult student, right?
Yes, depending. Yeah.
Okay.
But if you have more questions or things, we can talk about it. You can email me, you can send me a chat, so and I will definitely address more
Okay.
questions or concerns that you have. Yeah.
Okay. Thank you. The next one is okay. You've already talked about that medical expenses. Like, how long can you keep your receipts to claim medical expenses? Because there are times when I remember a few years back, like I have medical receipts. Say they are not much, like buying, paying for eyeglasses and those kind of stuff. And then when I go to find my tax, they will either say, "Oh, this is not enough. Keep it for next year." Every year, that's the same thing they will say. So I don't know how long should you keep your receipt for you to claim it in the future.
So the, keeping receipts is one thing. Keeping receipt is just is a support document, right? Because if CRA wants to call for audit or anything, and they can audit it for the past 7 years, those are support documents you can get. And if you're talking about claiming in future, those are the things you look at.
Yeah.
So you're trying to say, oh, how can I plan it? Can I move my expenses to next year? The
Yeah.
question is it eligible for it to be carried forward? Those are questions we need to now start looking at. Not all expenses, not all deductions, or not all tax credits can be carried forward.
Okay.
That's one thing we should know. So what we need to do for medical expenses, I've not seen anywhere where it says it needs to be carried for. However, if there are expenses that you've not really considered last year and you've already filed a tax, you can actually go back and refer if you think that you can utilize it to get a tax refund.
Okay. Thank you. That's all.
Uh, I think we are. Any other question? I think we are almost right on track.
So the other question I see here is, okay, if you're as an employee, if you have a medical and dental plan, can it be deductible if it is a co-pay? That is, probably yes, the employer pays 80%, the employee pays 20. That 20%, is it deductible? I guess that is the question.
going to be more of like a tax credit because the part of amount you pay is definitely it forms your medical expenses. Yeah, I have a plan as well. And again, I incurred another private insurance. I have a private medical plan again. All those things are like accumulates to be your medical expenses. Then calculation I went through, I mean, that's a calculation definitely that will be applied for that additional medical expenses you incur. And when you look at those calculations, at the end of the day, it's like literally if I'm paying $4,000, I'm just getting an impact of like about $205 in tax credit. So we need to understand that as well.
Okay. Okay. The next question is for GST and HST refund. Do we have to gather all receipts, or how do we get through to be able to
So
GST tax refund?
So on the personal level, for GST and HST, you don't need to do that. But I know definitely if you have a business or you have a business activities whereby you need to file your GST, HST, definitely it's quite important for you to have your backup. And because, for example, let's assume I made a business loss, and let's assume my expenses is more than my income, which means, and let's assume all the expenses are subject to GST, HST. At the end of the day, if I'm filing my GST, HST, I'm going to be claiming a GST, HST refund from the government. And let's be realistic to ourselves. Definitely, when you're claiming a refund, sometimes you're just, okay, are you actually entitled to that refund? I don't know how it's going to be triggered or anything. Then, okay, do you have a support document to show that these are the expenses you incur? Those are the things. So, so on a personal level, no. On a corporate level, or that business activity level, where you need to file your GST, or either quarterly, semi-annually, or yearly, as the case may be. I mean, it's important in case.
Okay. Another question here. I missed it. It was way back up. The question was, she wants a copy of the presentation.
So, uh, yeah. But again, I think we are actually running out of time as well. So, for any further question, honestly, you can get in touch with me, send me an email. I'm very quick with emails, honestly. ASCP, if you send me a question, emails is very, very quick. But uh, yeah, do you still want to take one more question? Because I think we are almost done with our time. I'm very time conscious person. My 6 is 6. We finish the exact time.
Okay, sounds good. Can you put in your email? I don't have it handy, but I've put in your phone in the chat, but I don't have your email handy. So please, you can just text it. Someone has asked, how much do you charge for tax consultation?
Okay, I'm just putting it in now.
Okay. Okay.
Thank you very much. Thank you for the time. Thank you, everyone. It's quite a large people that joined this webinar. Thank you. Really appreciate.
Thank you very much for your time, Deji. I really appreciate. Thank you. I hope you all learned a lot. I learned something. And if you want to reach out to him, feel free to reach out to him if you have questions. And we might actually have another one. Part 2 might be in February. I hope so. I'm going to drag him.
We're also hoping so. Thank you.
I'm
And
going,
I believe you can also hear us.
I'm going to drag him because he wants to run away now. He's a very time.
I can hear. Thank
Okay, so thank you everyone that joined. I hope you had value for your time. Have a wonderful evening
Thank
and
you so much for putting this together as well.
Bye,
welcome.
everyone.
Enjoy the rest of the
Bye.
day. Bye.
So-
Bye.